And joining us right now, Ramesh Iyer. Ramesh, good to have you on the show, and your Q3 update clearly signals a very healthy disbursement and recovery. Help us understand the pockets that are witnessing growth and give us an overview about how the rural recovery has really been shaping up.
So I think first and foremost, rural continues to remain buoyant. I think the yields have been good because of a good monsoon, and therefore the sentiments are continuing to remain positive across the country. And I'm not kind of specifying any particular state or otherwise. We definitely have seen a good growth momentum. The recoveries have been pretty good, and therefore any particular segment that if we really talk of in tractors, we have actually gaining market share and our volumes are growing. In few quarters before, there was a discussion about are we losing out on some tractor volumes, etc. I think we've gone more deeper, we've covered more dealerships, we put people across various dealerships, and our volumes in tractors have grown. Clearly, we see gaining of market share in tractor, gaining of market share in Mahindra Auto products. We've seen in car, we are getting volumes. Pre-owned vehicle has been a very buoyant segment. So I would think overall rural has shown absolutely good turnaround from a vehicle and tractor perspective for us particularly, and therefore I won't single out any particular product, but we have seen growth overall across all, and that's what has registered the growth in our disbursements. So far as recovery is concerned, I have been saying it right from the first quarter when we had the pressure that those are temporary pressure because of the market conditions. As the consumer come back to the market, start earning, their activity begins to happen, we will see a rollback of all of that. And we have seen it in the second quarter. We are continuing to see it in the third quarter. And we are very confident that that's the way it's going to be going forward. We have clocked actually 100% collection efficiency in December, as you've seen. And we are kind of seeing a continuous reduction to our NPAs from what it was in the first quarter. And so is the collection efficiency improvement month on month.
Right. Ramesh, so looking at the current market dynamics, highlight for us what are the key consumer trends and the payment trends that you have, witnessed so far. You've guided to bring down the NPAs below 4% by year end. What gives you this confidence?
So we continue to maintain our confidence that we would try and bring it to below 4% net by 31st March. And, again, this is something that I've been saying regularly, that the second half is always a very good half for the rural market, and especially the post-harvest quarter is always the best. And therefore, the fourth quarter we have seen in the past, any number of years you go back, you would see the fourth quarter registers phenomenally a good collection. Also happy to see that the economic activity turnaround is there. We've seen the tourism has picked up. We've seen the people movement has gone up substantially. All of that is, contributing to people earning better and are able to repay well. And therefore, we continue to hold our direction that we would try and bring the net NPA to below 4% by 31st March. So that's a clear visibility. And as I said, collections from every segment has been witnessed. Tractor has witnessed one of the best collections in this quarter gone by from every state where there was a harvest. I think we've had phenomenal collection. So very happy to report that the collections from every segment, every geography has been good. And so seems to be the trend going forward, and therefore confidence to bring the net to below 4% by March.
Morning, Ramesh. Alex joining in as well. Just on the topic of asset quality, and the regulator, Reserve Bank of India's latest norms, do you anticipate any impact on the credit costs as well as on the margins?
So, clearly by our discussions within the industry, we've understood that the regulatory requirements are under the IRAC norms and not under the Ind AS norms. And therefore, as far as the P&L is concerned, you may not see a major impact on the P&L. However, under the IRAC norms, one would see an increase in NPA happening due to the approach that would now have to be adopted going forward. But again, on the ground reality is that these consumers earn and pay, and therefore for them, a particular due date is not something that they will be able to adhere to. And that will be a little pressure point for the retail industry, which will show up a little increase in NPA so far as the IRAC norms are concerned. But under Ind AS, we don't see an impact because of that.
You've already given us a breakup, Ramesh, of how the business went back to normalcy in the second quarter. Your operating costs picked up, but the AUM growth was a little muted. Could you give us a guidance as to how that AUM growth is going to be going forward, and where's the growth going to be concentrated in?
So far as loan mix is concerned, it's again an outcome of how much does each OEM sell in that market. So therefore, we don't see a substantial change to the mix that we currently have as far as the AUM is concerned. Again, the AUM growth for the year would still remain range bound as you see now, because in one quarter, you don't catch up for whatever you've not been able to do in the last couple of quarters. But clear visibility is that the sentiments are very positive, and then you will start seeing growth of AUM the next of whole year. I would think that the AUM growth would be much visible as compared to the fourth quarter standalone. Definitely year on year, there'll be a good growth. Quarter on quarter, there'll be a good growth. But so far as the overall year is concerned, it will remain range bound as we see now. Because the vehicle availability continues to be an issue, right? Even though the demand is high, we don't still see vehicle availability is still going up substantially. So unless the vehicle availability goes up, to predict that the volumes will substantially go up will be a little difficult.
All right. Thank you so much, Ramesh, for joining in. As always, pleasure speaking with you, and wish you all the best in 2022.